Hello and welcome. I have with me Prime Minister's Economic Advisory Council member Sanjeev Sanyal. Hello and welcome to ET Now, sir. I will start with the most worrisome topic as of today, that is the falling rupee. We have seen rupee fall over 6% in the current year itself. Is that a worry, and how much of it is a worry?
Well, I think we need to see that in context, in the sense that the rupee is obviously depreciating against the US dollar, but do note that it is appreciating against pretty much every other currency, whether it's the euro, the British pound, the yen, and so on. And I think on a weighted basis, if anything, it is appreciating. So we need to be a little careful about judging a currency in that context. I think the Reserve Bank, quite correctly, is allowing that adjustment to happen. We have plenty of reserves which they are using to smoothen the course, but it would be unwise to try and defend a level in a situation where the US dollar is clearly strengthening very rapidly.
Do you think we should mentally be prepared for that 80 level mark? In fact, some foreign analysts are saying, economists are saying that in fact 81 should not be a surprise.
As I said, well, we have already hit 80, so that is not the issue. My main contention here is this is related to US dollar strength. Now, I am not in the business of predicting where the US dollar will go. All I am trying to say is we need to maintain monetary discipline at home and to allow the rupee to adjust to wherever the market will take it, given the context of what other currencies are also doing. Because in the end, do remember that we compete with those countries, we export to those countries, and even when you're taking the US into account, do remember that the US is an open market where we will be competing against all these other countries for goods, services, etc. So in that context, we need to maintain a certain level of flexibility in allowing the rupee to go where it will. What is important is that this happens in an orderly way. And for that management, we have more than adequate foreign exchange reserves to smoothen the way. Reserve Bank is leaning against the wind in both directions it does. When it was appreciating, they were also accumulating reserves. And now, quite correctly, they're using some of the reserves to smoothen the way. But eventually, the market has to be allowed to play itself out.
RBI also did take several measures recently. Do you think, when will the impact of those measures be visible, and are these measures enough?
Well, it depends what you mean by those measures. There were some shorter-term measures to sort of facilitate short-term flows. At the margin, they will be beneficial, but I think the really big measure that they announced, which is relating to internationalization and allowing of rupee settlements, rupee-based settlements for our external trade, I think that's a very major measure in the medium to long term. I don't think that has too many short-term implications. But yes, allowing for the rupee to be used for international trade settlements is a big step in the direction of ultimately converting the rupee into a hard currency. As an emerging economic power, we should aspire to having the rupee being used as an international currency, at least for trade with India, if not for even other countries. We should aspire for it to be a reserve currency. We should aspire for the rupee to be a part of, the IMF's SDR basket, for example, and so on.
But is there a level of rupee that will worry you?
Not if the rupee is movement is happening in the context of a global strengthening of the dollar. So it will only be in the context of what is happening with the wider landscape of exchange rates. I would caution against trying to defend a specific level of the rupee in a context where, let's say, the US dollar is going through some sort of a spike, because it would unnecessarily stress our own financial market adjustments. There is no real reason to do that. I have been in financial markets for many, many years. Defending a particular level as a hard level by any central bank is usually just creating a target for speculators. So I think this approach of using using reserves to smoothen the adjustment is the right thing. Meanwhile, the thing that we do need to concentrate on is making sure that our own internal monetary control remains in place, which is the case. If you look at last few years, despite a lot of advice, by the way, from experts around the world, we maintained very conservative control over both our fiscal and monetary policy. Our inflation rate, as you know, is right now below that of the US. If anything, in real terms, we should be appreciating against the US dollar. But it's okay. Short-term deviations happen, and it's fine. We should not unnecessarily fight it. In the medium term, and there's more than adequate evidence to suggest this, maintaining monetary controls, i.e. that our money supply does not blow up, particularly vis-a-vis US money supply growth, which, as you remember, had blown up very sharply, and that our inflation rate does not go significantly higher than that of the US inflation rate. And again, in that context, our inflation rate is below that of the US. So in real terms, the US is going to go through this massive appreciation against everybody, and ultimately that will slow their economy down. It will, the whole cycle will go at some point into the future as their economy slows down, inflation comes off. They will also cut interest rates and so on and so forth, and that dynamic will play itself out. It is important, consequently, to be able to see through these cycles and maintain control. That is the most important thing, that we maintain monetary control. And this is a point we made all through the COVID cycle. If you will remember, there were many sort of experts advising us to sort of go out there and spray money around in order to revive the economy, and we refused to do it. The benefit of that is now coming through.
Rupee fall will also definitely, it pressurizes the current account deficit big time, and the government also took recent some measures. They increased the duty on gold and silver. But do you think there is a comfort level of this CAD that may be breached going forward?
No. So as far as the current account deficit is concerned, by the way, depreciating rupee actually helps the current account deficit by making us more competitive and making exports less competitive. So the causation is in the other direction. Anyway, as far as the current account deficit is concerned, it will rise, but do be clear, what is the source of this? This is not that our exports are doing badly. In fact, our exports are booming. The problem is there has been this massive spike in energy prices, which has nothing to do with us. It has to do with a war in Eastern Europe. But of course, as an importer of oil, we do get influenced and impacted by that, and we can't hide from that. There's nothing much we can do it in the short term. So, we have to, in some ways, allow for that current account expansion. Again, we have resources to be able to go through that cycle. And let me say that this is a pressure that is being felt in many nodes across the global economy. We are hardly the weakest node, and so one of the issues now to watch out for is how this plays itself out through the financial systems around the world, and you can see that enormous stresses are being placed on that. So our game right now is to be able to use our macroeconomic strength to be able to ride this out. Those who are able to ride this out to the other side will be big winners, because they will be the people standing at the end of this sort of storm. So I think that is what our focus should be.
You did mention that we are still lesser in inflation as compared to the US. In fact, the last month's inflation, we see a little bit of drop. But do you think those higher peaks of inflation, we are past those, and can we see moderation in the coming times, because commodity prices are also falling?
So some commodity prices have declined, but oil prices, even after coming down from 120, are still running at 98, so hardly a comfortable situation. And there is a significant amount of volatility in the world even right now. So to be able to try and predict where this is all going, well, I don't know. As I said, the most important thing of policy making is resilience and flexibility, not our ability to predict the future. So do we have resilience and flexibility? Absolutely. That is why we were so conservative through the COVID cycle, because we maintain flexibility and options.
But RBI did mention that moderation of inflation will happen only by the third quarter in the second half. So do you stick by that?
That seems to be the best guess as of the information we have right now, and I think they are correct. But as I said, this whole thing is about policy making in an environment of extreme uncertainty. So in that situation, the thing that matters is our ability to respond to new situations as they appear, not our ability to be able to predict what's going to happen.
Like you said, crude has also fallen 20%. The GRMs are down. The government just imposed the windfall tax gains 15 days back. I think nobody expected the crude prices to fall down so much. So does this make a good case for now the government to bring down that windfall tax?
We will adjust as the situation emerges.
But do you think, like, the crude, what is our outlook? I mean, those high peaks, because it's still high. You said it's still beyond that comfortable level. It's still just below 100. Do you think those higher levels, there is still risk of coming back to those levels, or it will moderate now going ahead?
I'm not in the business of predicting oil prices. We will do what we can as the situation evolves.
The world also, we are seeing that it's going through a tough time, like we are discussing. The US does face a fear of recession. Europe is struggling with energy and with food crisis. China has its own set of worries. Where does India stand, and how can India come out all of this as a winner?
Let me reiterate the point I made earlier. Of course, we live in a world of uncertainty. And as I said, my ability to predict how all these events will pan out is not the important thing. What matters is my macroeconomic institutional structures capable of dealing with random shocks as they emerge? And one of the things that we have repeatedly exhibited throughout the last several years is, yes, we are. When we had a pandemic, we were able to roll out vaccines with hundreds of millions of people. It's a demonstration of administrative capacity, which I don't think many people gave us credit for. We built up foreign exchange reserves. When we were building these foreign exchange reserves, you will remember there were many newspaper articles about how $650 billion worth of foreign exchange reserves is too much, and there were wise statements about how we should create a fund which should be invested inside, which is an entire misunderstanding of what foreign exchange reserves are in the first place. So all of these kinds of wise advice was given to us. We focused throughout it on only one thing: deliver responses to situations as they emerged, and we built up options. Now, one of those options which is coming useful is this huge pile of foreign exchange reserves, which many experts told us was, irrelevant, but it turns out it is relevant. The same thing is true with our big emphasis on the supply side throughout, whether it's doing reforms on multiple opening up multiple sectors or privatization and so on. So the underlying philosophy that I am trying to get through to you is this: please do not keep asking me where oil prices will go. Answer is, I have no idea. But I can assure you that India is one country where we have built up the capacity where we can respond to these extreme situations very, very well, and repeatedly demonstrated that capacity. That is our strength, not my ability to predict what next random shock will come by.
Nomura recently, they have revised the India's growth outlook downwards to 4.7%. So this US recession, this fear of US recession, will it have any kind of impact on India, and how can we brace ourselves?
So I can't comment on what specific banks may or may not be forecasting. What I will say is that as things stand, the momentum in our domestic economy is very strong. You look at all the latest numbers that have come, whether it's In May, you have seen IIP number was up at 19.6%. Now, you can try and debate to what extent there is or isn't impact of year-on-year numbers from last year's second wave or whatever. Point is, it's a strong number. The GST numbers are very strong. The PMI for services is very strong. Even our exports are very strong. It's a different matter that imports are strong, but by the way, from a growth perspective, exclude the oil, even that shows that there is good strength, momentum in the domestic economy. So if for whatever reason they feel or others feel that there will be a very big slowdown, so be it. Then in that context, I presume the context itself will change. If there is a huge recession, let's say in the US, then US policymakers will also have to unwind it, and then we'll have a different set of problems and opportunities. You can't talk about increasing interest rates and say US will be in recession at the same breath. You have to, the circumstances will change, and so will our responses change.
With the US inflation numbers coming higher recently, it's almost imminent, I guess. In fact, the analysts are predicting that, in fact, it might be 100 basis point hike this time. In the Fed, there will be a huge flight of capital.
So we are, as I said, we will respond to it. We have the capacity to be able to do it. But most important thing is that you decide whether or not the US is in recession or not. So you can't have it both ways. So if the circumstances change, we will also change our strategy.
Do you think that because with the commodity prices also seeing a recent fall, do you think it's a time to revisit those steel export duties and other bans on the wheat exports that the government had levied? Is this the right time?
We will, as the circumstances change, we will look at it according to those circumstances. Right now, they are as they are.
So, but do you think it's the right time or no right?
As I said, we will revisit these things as the situation evolves.
We have seen a lot of additional expenditures this year, whether it was additional fertilizer subsidy, food subsidy. A lot of expenditures have increased this financial year. And India had kept a 6.4% target. Do you think, looking at the current scenario, global scenario, domestic challenges that we are facing, we should give a little bit of relaxation on the fiscal consolidation path, or we should stick to it? What is your view?
In every year, there will be some categories where there will be more, there will be less. So while there may be some pressures because of petroleum prices being higher and so on, for example, in fertilizers, at the same time, do remember that our revenue growth has also been very, very robust, whether it's indirect taxes from GST or direct taxes coming through from income tax and other sources. So on net, what will happen is, we'll see. We are still early enough in the financial year that these things will evolve. But do remember, it's not just one side of the ledger. It's the other side of the ledger is also also growing.
But like last year, we had seen like the government had decided to go for, they had relaxed the fiscal deficit target. I mean, last year, because that was a pandemic year. So do you think that logic and that additional expenditures government should go for, they can little bit of relax the fiscal deficit?
So in a certain year, we had, in 2020-21, we did relax it for a good reason, because we were responding to a lockdown. Now, right now as we speak, there is some areas where there may be additional expenditure, but do notice that we also have additional revenues from other sources. So on net basis, what it will be, we will see and adjust accordingly.
So you think government might be able to manage with the additional revenues that they might get this year? So coming to this inclusion of the India's sovereign bond and the foreign indices, that was almost, it seemed like we'll do it last year, but because of various reasons that it couldn't happen. What is your outlook? What is your view? And should India push it again for that inclusion?
So obviously, the Prime Minister did announce in 2019 in New York that we do wish to be a part of the global bond index. Since then, a lot of work has happened on it. It's not like you can just enter a bond index just like that. Many adjustments have been made on our side. We have opened up some part of our bond market to allow for foreigners to buy and sell more easily. Other microstructures have been created. A long conversation has happened with bond index, those who make those bond indices. And so this is an iterative process. Much progress has been made. There may be some small niggling issues, which I'm sure the finance ministry is looking at.
But it's still very much on India's radar.
Yes.
Thank you so much for such that insightful discussion on number of topics, including the current oil, crude that we are seeing. Thank you so much for insightful views.
Thank you
so
very
much.
much, Meghna.